Hello, everybody, and welcome back to another one of our expert interview where we're learning a lot, where we're talking to industry leaders, and we can go down and find out a little bit more about some of the greatest initiatives that happen in the sector. And we will have a very special conversation today. I know my voice is a little bit coarse, but it's never going to stop me working, isn't it? Right? So I had a little bit of sore throat, and I was saying to our guest today that I had family because we in the middle of holidays. I had family coming over, staying over with us for sometimes, and when they left, they forgot to give me back my voice. So that's why I'm having to work to speak to you. It's sort of a special voice, put it that way, right? But what we're going to do today is we're going to dive into the future of transportation in Africa. And I have for you somebody I'm sure you will really enjoy. It's John Tidmarsh, who is the CEO of VAI Capital or VAI Capital. So he tell us how he prefers to refer him to. Yeah. And we would explore today the innovative mobility credit fund. And what is it? So it's simply a pioneering, 70 million initiative that aims to really propel the adoption of electric vehicles across the continent. And what John would do for us, John would pretty much look at, because he has a wealth of experience and a bold vision, right, on the sustainable development and financial growth through environmental impact. And he will join us and we're going to uncover the motivation, challenges, and the opportunities that lies in this fantastic Africa e-mobility sector. So stay with us. Hello, everybody. My name is Tony T. I'm the founder and CEO of Renewables in Africa. So, if you come across us for the first time, what you want to know is we are our Africa clean energy champion. What we do is very simple. We raise awareness about renewables energy in Africa and across the globe. If you are a project developer, if you are an EPC company, if you are an investor, or you are a supplier and you say Africa is a place that I like to expand, maybe because I'm entering in Africa for the first time, I'm already in Africa, I want to expand. Guess what? This is a fantastic news, and I want to talk to you. I definitely want to talk to you because I want to support you in your growth. I want to help you solve two main issues that you will have, right? Number one, I want to help you to definitely squeeze your business development costs. I also want to help you to fast track your access to customers. How are we going to do that? We have our awareness packages, right? And we're going to give you three things with awareness packages. Number one, visibility is key. If your target audience, the people that buy your product, your service, don't know that you exist, you go nowhere, right? So they want to know that there is X and X has such a product, and I want to get that. So we're going to give you the visibility that you need. From that visibility, you certainly have qualified leads. And from those qualified leads, this is how you can derive the sales. As simple as that. And I know as I talk to you like that, many of you will be a little bit skeptical. That's absolutely fine. Absolutely correct to be skeptical. That's what I'm saying. Just book a 15-minute call with me. I can walk you through what we're doing, what we've done for other people, and how we could help. And from there, you're going to see whether or not it makes sense for you, right? I think it's straightforward enough. But today, it's all about talking e-mobility. And as I say, I want to introduce you to John Tidmarsh, who is the CEO of VAI Capital. I'm not going to say more because John is here with us and he's going to tell us what it's all about. Hello, John. Can you hear us?
Good afternoon. I can indeed. Very, very good to see you again, Tony.
Excellent. It's almost like you're coming out of a shadow, right? To enlighten us.
We had some technical issues in setup, so you're going to have to live with
Uh,
this.
yeah, I think that's absolutely okay. I don't think people will mind, to be honest. I think as long as they can hear you, they can figure out what you're saying, and it all makes sense. It's all perfect and great. So, what happened, John? You're not going on holidays like everybody else?
I've already had a few days off.
Okay.
And maybe we'll get some time in the autumn, but
Yeah.
otherwise, it's an extremely busy time. So there's no rest for the wicked, as they say. So
Yeah, and also you're busy collecting the money in order for you to carry on with the fantastic opportunity that you have. So, well, listen, John. Like I say, we will have a fantastic 35 to 40-minute conversation here. I'm expecting, but before we dive a little bit more into that, I was wondering whether 'cause I think that people following us from LinkedIn, from YouTube, from Facebook as well. We want to say hello to all of these guys and thank you for joining us. If you do have questions, please drop them in the comment section or maybe send me a DM. What I do, I take those questions and ask them to John, and obviously we can have a fantastic conversation like that. So, but before we dive a little bit more further, John, just to give proper justice, because I know you have a very extensive career in the financial world, and you're now moving into a sector who is really buoyant in Africa. So I was wondering whether you can first of all tell us who is John Tidmarsh and what is VAI Capital.
Well, thank you for that great introduction. I'll try to live up to your fine words, Tony. But so good, good afternoon. I'm John Tidmarsh I'm founder and CEO of VAI Capital. And VAI Capital is really an advisory firm specialized in e-mobility that we set up in 2021. And since then, we've really been very heavily engaged with e-mobility projects in Africa. And today we're launching a debt fund called the Mobility Credit Fund, the MCF, to support Africa e-mobility businesses with growth capital. To answer you, so who am I and sort of why did I find myself here? Just to give you a flavor, I've been in sustainable finance since 2002. And before setting up VAI, which was in 2021, I have had a very long experience actually in sustainable finance, setting up a sustainable VC fund, for example, supporting growth businesses in partnership with the European Space Agency. I've worked in the creation of an emerging markets green infrastructure fund, working for Arnold Schwarzenegger, which is extremely exciting. Learned a lot from Arnold. I've also been heavily involved, though, on the not-for-profit side, supporting the sustainable finance sector for a number of years, serving on the board of Sustainable Finance Geneva, the sector representative organization, and briefly serving also as executive director. So that's me.
That is very interesting, right? So I'm sure you've been using the line, I'll be back very soon.
I'll be back. Exactly.
If you work with Arnold. No, I think, like I say, it's very impressive. And that's why we were so happy and privileged. That's how we feel to have you here speaking to our audience, because, like I say, the experience speaks for itself. And I was wondering as well, if you could maybe give us a little more understanding of VAI specifically, and why did you decide to set up these mobility credit funds?
Yeah. Well, thanks for asking that. I mean, I think the bottom line, the starting point is e-mobility is an incredibly exciting space. I don't know, I'm sure a lot of people will agree, but it's very fast moving. It requires a lot of energy, and it's got a huge future. So let me describe why perhaps first I set up VAI, and then move on to the Mobility Credit Fund. I mean, as I said, e-mobility is a very high growth market that's going to require phenomenal amounts of investment globally. So there's a lot of money to be made, right? There's a lot of capital to be deployed, a lot of money to be made. But it's also extremely impactful, not just in terms of climate, but also because it can transform people's lives for the better. E-mobility can obviously reduce issues around pollution, which takes a huge toll on people's health. And it can increase income for millions of people, actually, who depend on mobility for their livelihoods. And for this reason, it's really extremely tangible, and I can really relate to that. So it's a real personal motivation. In addition to doing well, you can also do good, and that's a major reason for setting up VAI Capital. And why this is also why we set up VAI Capital to be specialized in mobility. Our objective is really to create opportunities for commercial investors to deploy capital for financial return, but also to generate impact, and to do it at scale. So, by the way, I mentioned the word commercial. It's not innocent. If impact is to be scaled, it will be because capital is deployed at scale. And for this, any investment product must cater to the needs of the commercial investors above all. That doesn't mean to say that you cannot be generating impact, but the products need to be designed around the needs of commercial investors looking for commercial returns. So, why the MCF, to answer the second part of your question? There's the most important point is that there's an opportunity, and the opportunity is that there's a financing gap. So for the past 4 years since we set up VAI, we've been working extensively on pilot projects and advisory work for corporates in particular in Africa. And it's become plainly obvious that really the potential for e-mobility, if it's going to be realized, the sector needs growth capital. And so without that capital, the sector will not grow. And the problem, of course, is that the sector is growing extremely quickly, nevertheless, but the traditional existing investors are not adapting fast enough to be able to meet the needs. This is why there is a financing gap today, and why we have set up the Mobility Credit Fund to fill that gap. I guess probably front of mind to many is, well, you know, how big is this opportunity? What is the degree of this scale? So I was thinking about how to illustrate this, but probably what speaks most loudly is that, give you an example, to replace the existing fleet of petrol motorbikes in just 5 African countries. Research from McKinsey estimates that it's going to require just under $9 billion of investment just to make that transition for motorbikes. Perhaps useful also to use a specific example of a specific country. If you look at Kenya, if half of the annual rate of replacement of petrol motorbikes were to be electric, we're looking at a $200 to $300 million market just for bikes and batteries per annum. And that's just in Kenya, just for two-wheel vehicles. And these numbers are, you know, before we even start to talk about buses, other vehicles, much less the energy, providing the energy that's necessary to actually charge these vehicles. So you can give, I hope that gives you an idea of the extent of the scale. Perhaps, you know, this is the MCF really is, as you said, Tony, we're aiming for a 70 million close, final close. We can go as far as 100, but 70 is our target. We'll be investing debt, $5 to $10 million tickets, Pan-Africa, but obviously with a focus on East Africa at the moment, but we see opportunity across the continent. And we'll be offering businesses with proven technology, proven business models, the capital to grow and to expand both within the countries that they're operating, but also across borders. So, you know, the universe is big. And, you know, because this is something that comes back many times, we've screened more than 200 companies amongst the potential investees, including businesses throughout the value chain. And when I say the value chain of e-mobility, that's everything from assembling vehicles through to operating charging networks, operating fleets, to the end of life. What do you do with the vehicles? What do you do with the batteries? There are opportunities throughout that value chain. It could be OEMs, so assemblers of vehicles, could be charging infrastructure providers, fleet operators, asset financiers, battery manufacturers, and repurposing. In two-wheel, three-wheel segments, but also four-wheel. That would be sedans, pickups, buses, minivans, medium and heavy-duty vehicles, and of course the energy side. So you can see it's a pretty large sector.
I think that is very. I think definitely. If you're looking at the full value chain here, definitely I would say the opportunity almost endless. Just a quick question: why did you decide to set up on debt facility as opposed to equity? Just out of interest.
Well, I mean, I guess the important thing that to remember is, you know, what are the driving sort of factors behind e-mobility. I think that there are really 4, I think, that are probably the most important. Before I answer your question about the debt, okay. There's far lower total cost of ownership, in terms of how much it costs an owner of a vehicle. Powering an EV is 5 to 6 times less per kilometer than petrol, for example. And this is driving uptake. It's an advantage to business, but it's also, for the mass market, it's vital. So lower and middle income users, which is the fastest and growing and earliest emerging sector. Motor taxis, for example, they can take home more than 25% than when they were using a petrol motorbike. That's huge. So total cost of ownership. Technology, that's the other thing. It's improved significantly. There are many fewer concerns about range, but also about performance of the vehicles themselves, the electric vehicles. So there's much less concern over the performance of electric mobility. Thirdly, there's policy. There's a political focus on reducing carbon emissions, but also pressure to reduce fuel imports. And if you consider in Kenya, for example, just for two-wheelers, hundreds of millions of dollars are spent per annum importing fuel. So you can understand why there's a policy drive to actually support electric mobility. And then, of course, the expanding ecosystem. I mentioned the value chain earlier. There are many firms that are starting, and many firms that want to be involved. And we've screened, as I said, more than 200 over the last 12 months.
Yeah. Okay. No. Thanks for that. I think that's pretty extensive. I think you wanted to respond on the question as to the mobility credit fund credit facility, which we're asking about why debt as opposed to equity. I think that's where you wanted to discuss about the driving factors behind the EV boom. But I was wondering, why now did you decide to go for the debt side as opposed to equity?
Yeah. Well, the most important thing is that electric mobility in general is a very capital intensive sector.
Yep.
And for that reason, it's extremely well suited to debt markets. Because the bottom line is because assets can be used as collateral. Actually, what's happening today is that the traditional lenders are not lending. Traditional debt lenders are not lending today, and other sources are not lending either, right? And they're not appropriate or suited to the e-mobility sector. If you have a quick look at equity investors, they are extremely expensive for founders and dilutive, because you have to give away shares in your company. Technology funds, they prefer to invest in asset-light businesses. Software, for example, much more scalable and a quicker return and a quicker exit. Infrastructure funds also, they seek more predictable cash flows that come from long-term offtake agreements, for example, and different types of financing structures. And then, of course, there are local banks. They don't yet understand the sector, nor how to therefore price risk. And often transaction sizes are smaller than they would prefer to deploy, and they don't have the expertise yet internalized. And really, the MCF, for that reason, fills that gap for debt, which is uniquely appropriate to a growing e-mobility industry, and really with a structure which is appropriate to best managing risk.
Yep. Thank you very much for that, John. And I think you will pleased to know that we've already received a couple of questions, so we're going to look at that in a minute. So, but I just wanted to ask a very key question for me, because we need to address that. Because you mentioned that very quickly when you were in your intro, but it's good to spend some time there. You were talking about the opportunity for EVs to really drive rural electrification and support development of decentralized grid. I was wondering whether you can maybe elaborate a little bit more, because this aspect, I don't hear that often. That's why I wanted to pick up on that.
No, I mean, with pleasure. I guess if you look at access to energy, right? The World Bank, actually, it's an interesting fact, is that they predict that by 2030, if nothing is done differently, almost 600 million Africans are not going to have access to energy. So while mini grids which are basically small grids attached to a certain number of households providing energy, while they've been long seen as an answer to this problem, their adoption is stunted, basically because they're unprofitable, right? They require subsidy. we've actually looked into this quite closely, and they are selling typically 20 to 40% of energy produced. Electric vehicles, because they consume electricity, can provide a vital anchor load or offtake. And they can consume basically the excess energy and increase the profitability of these grids. Vitally, they're actually selling electricity to consumers for, in this case, it would be for electric vehicles, but who can actually pay for it and have good reason to buy. So they're actually saved and that's because they're saving money. They're saving money relative to the petrol that they are already buying, right? So one of the projects that VAI has been working on is to really pioneer the use of electric vehicles in rural and peri-urban areas, designing business models and investment models to replicate across the country. Not only are we expecting this to become an attractive and scalable investment opportunity, but also an impact opportunity. It's going to help us to, it's going to help access energy as well as transport. And both are, as no doubt you know, very closely correlated to welfare and development. So just to give you, and I realize that your audience is quite a lot of developers, and so just give you a few sound bites. The first feasibility study that we worked on is 550 kilowatt solar array providing energy for 200 riders, with the potential to scale up to 1,000 in a region where there are approximately 8,000 motorbikes in operation, petrol motorbikes. So this is looking at a capex in the region of $7 to $10 million.
That's absolutely beautiful, and that's what I can say. I wanted you to talk about that because that scale is an opportunity, and we don't say that often. And I can definitely back you up when we're talking about the fact that the EVs really lower the cost of ownership, especially for those users. Because for us renewables in Africa, so people following us know that we've been working closely with an e-mobility, so e-bike company in Benin. They called EU Motors, and they were showing numbers and saying that the drivers, taxi drivers, was it motorbike in Benin, they were saving up to 100% of the annual income by just switching from petrol.
Yep.
So by just switching, essentially they can take home twice the amount of money that they usually make. So it really is a no-brainer. So that's what I say.
Yep.
And it's great because I probably will make the intro to you so that you can also talk to them, because those are great guys. So thank you very much for saying that. Like I say, we really find what you're doing interesting. Like I say, your fund, we don't see that many of those, and then that's why we were pleased and happy to support our renewables in Africa. I was wondering though, if you could maybe talk a little bit more about the challenges, the key challenges that the EV transition face.
Yep, sure. I mean, I guess we started to touch on it earlier about some of the financial challenges, right? Which is probably a good place to start. EV is capital intensive, I mentioned, suited to the debt market, but lenders are not lending, right? The traditional funding sources are unsuited, right? I discussed the different types of funders, whether it be equity investors, tech funds, infrastructure funds, or local banks, and the fact the MCF fills this gap. But there are other hurdles, right, to the transition. And I think probably one of the most important is reliance on long supply chains from China and India, and this is really affecting the speed of uptake. Supply, I mean, just to give you a flavor, supply takes months, between order and actually being able to sell a bike, which creates financial problems, incidentally, for the OEMs. The reliability of the supply of parts as well. Larger inventories, again, creating challenges for the businesses, and so on, right? So the MCF incidentally is addressing this also by looking at opportunities also for local production capacity. Because if you actually are producing, you're assembling essentially, because OEMs are assemblers. You can build to demand, and you can have supply of components, but you have a much better control of your supply chain. The second thing is the lack of awareness of e-mobility, and this is fascinating actually, because I mean, e-mobility is a new market, right? And people are going to buy when they're confident. And this really underlines the need to raise awareness and to educate. An interesting actually illustration came up with the business that we've worked with, and they're talking about their experience and with particularly with their distributors, and they said if EVs were in stock with their distributor, 1 in 2 consumers would test drive, and if they test drive, 3 in 4 would buy. Right, so that basically is 75% of those who test drive will buy. So it illustrates really the need to actually raise awareness, and then actually when people are more aware, they do buy, right? So and it's a very high proportion do. Another little anecdote. This last week we were test driving for a corporate use case outside Nairobi, and we did 8 days of test driving with 3 different manufacturers, stopping in small towns and villages to deliver goods. So we were shadowing drivers. The drivers constantly got comments from petrol motorbike owners. So having seen how the bikes behaved, etc., they said, "Can we swap our petrol bikes for your electric?" So no, it was just give us a swap. So I think that kind of says it all. So there were crowds of people around the motorbikes as they were driving through these towns and villages. So that's great interest and raising awareness and subsequent interest to actually convert.
Yeah, and yes, yeah, so go on.
Yeah, and there is a third point, which is I think very, very important to mention, is that there's also a need for complementary infrastructure, right? And what do I mean by that? If you invest, for example, in an OEM again, right? So a company that assembles and sells electric vehicles, the cash flows of that company are going to be dependent on separate financing of other assets. So, for example, it could be batteries. You could assemble and bikes, but if no one has the batteries are not financed that are necessary to swap in and out of a motorbike, of electric motorbike, no one's going to be able to use the bikes, and therefore the company that you've invested in is not going to be able to sell, right? Continue selling. And the same goes for asset financiers, right? The well-known asset financing companies. If they themselves haven't got financing, they're not going to be able to lend to people who want to buy those motorbikes.
Correct.
Right. So it is an ecosystem of interdependent businesses, and if you don't understand that ecosystem, you can't understand the risks, and you can't legitimately manage them in your investments. So it really underlines again the need to truly understand this independence, and it's the reason why we need a dedicated investment fund, which is the Mobility Credit Fund.
Yeah, I think what you say is for me just so spot on, because as I say, having the exposure that we have working with various e-mobility companies, especially AO Motors, as I mentioned to you, to obviously launch a crowdfunding campaign, what you say is clearly spot on, because the opportunity is there, everything is there, but there are people to obviously who are prepared to lend to them. They're not that many. And that's why I say I support whatever you're doing. So maybe going during that a little bit more on that. You were talking about the necessity for battery and battery recycling. How important you believe it is, because you've been complaining, US, talking about the interdependence that we have with China and India, where obviously this is good, but it's for the market to grow, we need as well something to happen locally, isn't it?
Yeah, I think, I mean, there are a lot of batteries. At the moment, there's a problem at the end of the value chain, is when batteries do come to the end of life, how are they going to be managed, right? You're not going to just dump them in a local riverbed, right? That's obviously not a question. So what we are doing is we are there aren't the answers that exist today are still on the level of repurpose, reuse, and then recycle, right?
Yep.
So it's repurpose and reuse first, and then recycle. And once an EV battery gets to 80%, it's probably in terms of its efficiency, it's no longer really useful for e-mobility. But that battery can actually be used for many other applications, and it actually has a residual value. Now, realizing that residual value is also a journey, because it needs to be proven at scale, right? So people are buying them, and therefore there is a residual value of the batteries that you might have invested in, for example. So you could potentially resell them, but that's going to be a growing market. There's also going to be a growing market for repurposing batteries, right? So taking individual cells out of batteries and replacing them. So local capacity to do that is going to be extremely important. And we've seen very little of that so far, but there are signs that it is going to be emerging.
Okay, thanks for that. So now talking about the finance challenges that you talk about, you say that, and which is true. Like I said, we've seen that as well ourselves. It's a very much capital intensive business when you're running an easy AVs. Yeah, you have high costs of raising capital as well. So, what are the other challenges you see from a financial perspective, and more importantly, how could they get solved?
Well, I think I think I've covered really the most important. But one thing that we do, which is I think a true differentiator, is to really first of all manage uh, help our investees better manage the batteries, for example,
Okay.
and we've got a technology based approach which gathers data from batteries and assets, uh, which allows us to not only monitor batteries from a distance in terms on from a safety point of view. So, are there individual cells that are breaking that could endanger the battery itself? So it could catch fire, for example, because one of the cells isn't working. But it's also in terms of what batteries are actually being used or what assets are being used, which affects the intensity of usage of those assets. If you're lending to a company, for example, and
Okay.
they're using that capital to purchase assets like batteries, you want to know how they're performing, but how much cash flow they're actually generating, right?
Oh,
What's the intensity of usage. So you've got a sort of a multiple benefit of tracking those batteries, both from in terms of understanding the risks to the assets themselves, but the credit risk in terms of the intensity of usage of those assets.
excellent. Thank you very much for that. I appreciate that. So let me share with you now a couple of questions that we've received. I think I've received two more since we talked. I think a couple of them came into my inbox. So the first that I'm gonna share, that let me just scroll up. Yeah, there it is. I think it's more common than anything else. We say I can provide. Okay, somebody promotes himself. We're talking about value chain here. I can provide infrastructure for solar, which can be combined with batteries. Okay, that's fine. So thanks for that. I appreciate that. So people listening to that, look in the comments just to see who the gentleman is, and that's okay. So obviously, we're never gonna stop that. That's okay. Thank you for following us and listening to what we're saying just right now. We appreciate. But I believe the same person has also a question, which is, do you think transporting energy on wheel instead of cable to save cost of for infrastructure? Well, I guess he's saying here, should we transport in wheels as opposed to cable to save costs on infrastructure? I'm not sure I understand exactly what it means. Maybe you have an idea of what it is.
Uh, I mean, I think probably I would imagine it's referring to use of batteries as home energy systems. So
Okay.
you can maybe charge a battery and then take it to a point of use that's maybe beyond the reach, if you like, of a local grid. That's what I would understand by that. And why not? Of course, if you've got a capacity to charge electric motorbikes or electric four-wheel vehicles, why not charge batteries? And you're selling electrons at the end of the day, right?
Yep. Yep. So okay, that's fine if that's what you say like that. So here is another interesting question which I have. I received on my inbox and I pasted it. So what do you think is the biggest obstacle of scaling? You were talking about obviously scaling capital, scaling also technology, scaling EV adoption in rural versus urban areas in Africa. Interesting question.
Yeah, I think it's got a lot to do with the fact that it's actually data. It's availability of data and confidence that you're going to be able to, one, what is the size of the market and the true behavior of the vehicles in that market. So where are they traveling when? How many kilometers in what kind of period of time? And that's therefore, and then the second one is uptake. What guarantee, if you're going to be doing some first projects around e-mobility, what guarantee have you got that people are actually going to convert to electric? So you don't want to build your infrastructure and then nobody buys the bikes so that to buy your energy, for example, or to use the swappable batteries.
Okay, that's a fair point here. So here is another question that we have. Two other questions for you before we can start wrapping up. So the first one, it says, I received that as well. So how will VAI Capital measure the environmental and social impact of the mobility credit fund investment? That's a very good question.
We'll be lending to businesses, right? So we're not substituting ourselves for the management of those businesses. But what we will be doing is we will be working with our investees in value add, right, to help them increase impact, but also increase their performance. So on the financial side, it's what I was referring to in terms of, for example, the technology solution, helping them optimize their operations, etc., monitor the performance of batteries, etc. But on the impact side, so the environmental and social impacts, we'll be engaging in a different way with the management to develop action plans to affect positive change. And that might be to make sure that for their motorbikes, for example, if again we talk about e-two-wheelers, that each bike is sold with a helmet that is certified, conforming to, let's say, the Kenyan standard for helmets. One of the big problems is that people will be buying helmets which are actually very substandard, and the result is they're not protecting people. So actually, by engaging with the company that they undertake to make sure that their bikes are sold with the right kind of helmet, you are making a change, and then you can actually measure that in various different ways. But each business will be slightly different. Each business will depend on an action plan, and we will support investees to actually implement those plans, or at least to put together solutions that will be implementable and also measurable and reportable.
Okay, excellent, excellent. It looks like people now start, sending more questions, most likely because what you're saying is interesting. I have another one that I'm sharing here. So charge the EV with a power. Okay, no, okay. That's maybe the gentleman from the first question who was maybe explaining. Charge the EV at Spark Solar versus. Yeah, I don't think that's a question. That's more common, isn't it? Yeah. So I have a question for you, which I've seen that we can use that to wrap up, which is this one. What I receive as well. What are the next step for VAI Capital once the mobility credit funds reaches its target close? I suspect they
Yeah.
want to know whether they're ready to invest.
Deliver for the investors is I think I'll leave it there. We've got a lot of plans going forwards, but our primary and most important objective is to deliver for the investors, which is what's going to allow us to go forwards and do
Okay,
more at greater scale.
I think that's very straightforward in here. Well, listen, John, I think that was a fantastic conversation that we had here. I think you've been giving us a lot of information, insights about why you set up the funds, what the facility is all about. We know it's 70 million, that you're going to be closing that hopefully soon, and you already have a pipeline full of potential investees. But I'm sure you're still happy to talk to some more if people are very, very interesting.
Yep.
And I think you explained to us why you believe obviously e-mobility is pivotal, critical for Africa, especially as of what it does to really close this gap. 600 million people that are actually lacking electrification. So e-mobility here can really serve as a anchor sector, anchor client for a number of those mini grids. That's what we need to tap into. That we need more people, more fund to look at this aspect because the sector is pretty new. So traditional investors, they don't have a proper understanding. That's why awareness, hopefully what we're doing right now today, it's a step in the right direction for people to understand what the sector is all about, how they can fit into the sector, and how they can really help. So that's great. But there is one thing that I usually would always I would say share with our guests when they're coming in, right? We like to give you one last quick challenge, which we don't necessarily share with you before, but it's relatively easy, nothing to worry about. But and it's all about. I'm gonna allow you, in the next 5 to 10 seconds, to maybe uh, pitch whoever you want to pitch. Either you want to pitch your potential customer or potential investor, but you have 60 seconds. I'm just going to give the floor. So first of all, who do you want to talk to? You want to talk to an investor? Or want to talk to a potential customer? What would you
I
say?
think I think the answer is quite clear. We'll talk to investors.
Good.
That
Okay. Hold on for a second. Don't tell me what you want to tell them. So what's going to happen? I'm just describing that to you. I'm just going to go on Backstage. You have the full screen just for you. And in
oh,
60 seconds, I want you to tell them why do you believe you are a viable proposition for them and why they should invest today, not tomorrow, and move ahead with your missions. So are you ready for that?
we're always ready for that.
Excellent. So let me just go on Backstage and the floor is all yours.
Thank you. Well, thank you very much. It's really the earliest days of a huge investment market in electric mobility in Africa. The Mobility Credit Fund is a specialized fund that's uniquely placed to deliver value to commercial investors. We are partnered with blue chip service providers, including Symbiotics Group. We have a very deep understanding of the sector based on long engagement for 4 years of engagement in the e-mobility sector, which has given us a very superior ability to manage risk. And finally, the Mobility Credit Fund is an opportunity to bring about positive impact in health, economic and social development, and of course, climate.
That's excellent. Thank you very much for that. Definitely, I can see that you were really, really born ready. Yeah.
Have
And
to be.
hopefully the message was were very clear people. John, that was again a very insightful conversation. We've learned a lot, and I would strongly encourage people watching this conversation live just right now with us. So reach out to John, and where can but that's just a good question. So where is the best place for people to reach out to you?
I would say on LinkedIn,
Okay.
so you can easily find me on LinkedIn. I think that's probably the easiest way, just to
Okay.
avoid crowding the inbox.
I think I do the same. LinkedIn as well. Like I say, I'm always on my LinkedIn, and the easy way. So if you're very interested into John and also VAI Capital, you want to find a little bit more, maybe
We've got a connection issue.
as an potentially as a potential.
I've just got you back, Tony. I lost
Ah,
you for a long period.
can you hear me now, John?
Yes, now it's perfect.
Okay, excellent. So sorry for that. I think that technical issues, but that's absolutely okay. I just wanted to say that I'm grateful for the conversation that we had. I think we learned a lot, and for people that want to talk to you, obviously LinkedIn is the best place they can get hold of you. Please do not hesitate to reach out to John, and I'm sure there is a lot that you will learn there. So John, like you and I, we keep on talking because there's many things that we can do together. We can support one another. But already it was fantastic opportunity for me to talk to you this afternoon, and as I say, so I'm sure we bump across each other very soon. Thank you very much for that, John.
With great pleasure. Thank you very much.
Excellent, excellent. So you have heard it, right? So thank you, John, for sharing such valuable insight on the mobility credit fund and also the transformative potential of electric vehicle in Africa. So what we've learned today about the challenges, but also the vast opportunities in this market, the e-mobility. So it's something I'm hoping that is gonna really stick with you, so that you properly understand what really lies ahead of us, right? And we found out about obviously VAI Capital, the strategic approach to overcoming the financial and operational hurdle, and we need support company like that. And it's clear from what I heard that John's effort, but also not just John, but the whole people working at VAI Capital, so they really shaping in here the a sustainable transportation landscape, and they're paving the way for significant social and environmental impact across the continent through supporting business in the value chain. So the audience, you guys, as always, thank you very much. So let's keep the conversation going. Let's continue supporting initiative and drive progress and innovation in sustainable energy and transportation forward. So thank you very much, and we'll be back with you very soon with another leader from the sector. Okay? Thank you very much, guys, and yes, have a great day.